So today I'm here with my good friend Sandra Navies, and we are having a conversation the other day about some of the challenges that home buyers faces, especially when they're self-employed and they're looking to buy. So Sandra came up with some ideas that will help you as a self-employed person navigate the way to be able to purchase a home. So Sandra, just take a moment and introduce yourself and let them know who you are and what you can do for the person who's self-employed.
Okay, perfect. Thank you very much. Hi everybody, my name is Sandra Narvaez and I work at Excel Mortgage Company. I have been doing this loan processing, and I am a mortgage broker also for more than 20 years. So I know all the ways that the lending institutions, the way that they are going to verify the income that they are going to use when you want to buy a house, which is a very important part of the financing of the house. No?
Absolutely.
So I think now that we are close to the tax season, I think it's very important for the people to know what are we going to put in the taxes, especially when we are talking about self-employed. So it's normal that the people have to put as much as expenses as we can when we are self-employed, no?
Right.
Not because of course you pay a little bit less taxes. But what is important also to know is like when the people do that, they are closing their doors sometimes to buy a home or to buy an investment home or a primary home, wherever. I have had cases in where people do more than 100,000, and at the end, after the expenses, we just find that they are doing like 20,000. So it's a huge difference.
Right.
So remember that we are going to use the income as a self-employed. We are going to use the net income. That means not the gross, but the income after all the expenses.
Right.
So therefore, it's very important for you to be very accurate on the real expenses that you have, because the lending institutions and even you need to know exactly what is your income to know what can you afford, what you can afford when you buy a home.
Right.
Yeah. So that's one thing that I want to be. Usually, when this is a self-employment person, the lending institutions are going to do an average of the last 2 years.
Let's say a person's, because they're self-employed, they're going to need to put more than the regular down payment, maybe 5 to 10%. Is that correct?
Not necessarily. No, not necessarily. You can be self-employed, and if you have done correctly with what your income are, and if you are good qualified, if you are qualified correctly, and with what you have put as a self-employed is enough for the house that you have, you can have a 3.5% down payment.
Gotcha.
A 3% down payment if you are a first-time home buyer, or 5% if you have already buy another house. So really, doesn't depend on that. So it's very important to do the difference here. If you can, in your income, if you can verify through the IRS your self-employed income, and it's enough for the house that you are qualifying for the average for the last 2 years, you can put as less as 3.5% or 3%. Now, if for whatever reason we cannot use that income because you didn't know and your tax preparer, whatever, put so many expenses, whichever the case, okay, then there are another ways that we can prove the income. It's going to be more risky for the lending institution because remember, it's not the government that is verifying that. So we have another ways to verify, which are a little bit more risk. So that means that maybe they are not going to lend you at 95%, maybe 90%, maybe 85%, depending on the case, because these are case by case. You have several ways also to verify income.
Okay. Explain what is called the profit and loss type of ways to purchase versus the 1099 or even the no debt to income ratio loan.
All these kind of programs that you just tell me, the profit and loss, the bank statements, the 1099s, the DSCR, There are other alternative ways of loans that you have when you cannot prove through the IRS. So that depends. Usually what they are requesting you in one of them is to prove via your CPA, via doing profit and loss.
So, Sandra, talk about the DSCR type of financing.
Yeah, we have several programs when you cannot prove your income through the IRS with your taxes. So there are several programs that we can use. Between them are the DSCR, the 1099, the profit and loss, the bank statements. So all of them are options that you can use to prove your income, and each of them has different guidelines. But in general, these are the ways that you can. In 1099, sometimes you just present the 1099s of all the year, and the bank is going to deduct a certain amount because you are supposed to have certain kind of expenses. Okay,
Absolutely.
and sometimes they want to verify that with the kind of deposits that you do in your accounts.
Right.
Okay, so just to give you very generally what they do. Also, we have the bank statements. Usually, what they do is they take the last 12 months or 24 months of all the deposits that you have done that comes from your work, from your income, and then divided by 24. So they do like an average. And from that amount, they are going to take out certain percentage for expenses, okay? Also, you have the DSCR. The DSCR that usually are the ones that don't require any kind of income. The DSCR programs usually they use for investment, investments, because what they want to do is they are going to use the income for the investment property that you are doing to pay by itself.
Gotcha.
So that's the security that they have, the safety that they have.
Okay.
Because they were. So that's another kind of program. That in that case, they don't need to know about your income, but the income that the property is going to produce.
Okay.
So there are, now what is very important? These kind of programs, because they have more risk, you have to expect that they are going to give you less amount, okay, less percentage of the purchase price, and the interest rate is going to be a little bit higher, plus the costing cost.
Right. But at least the person will be able to make the
do
purchase. So again, you know, this is valid information that most people want right now. Go ahead and just explain how people can get a hold to you.
Okay, my phone number is 407-724-5270, Sandra Narvaez.
And the name of your company?
The name of the company is Excel Mortgage Company.
And she's excellent, to be sure. And again, my name is Veronica Davis Lee with RE/MAX 200 Realty, and I can be reached at 407-721-2704. And together with Sandra, we've pledged to help our customers become homeowners in 2024, because everyone has an opportunity and a desire to become homeowner. We make it our business to be 100% committed to help you to become homeowner in 2024. Again, Sandra, 407-724-5270, and Veronica, 407-721-2704. Let's make 2024 the year you do something about it.
Okay, and just please remember, don't be afraid to look for us. We are here to help you. And if you are not ready to buy the home yet, we will give you the steps, the necessary steps to be ready as soon as possible. So just call us.
Absolutely.